Friday, February 9th, market analysis, Stan Ehrlich. I'm still a little under the weather, so I'm going to make this fairly quick. You know, I talk about the indexes first, and now today, for the first time in over a week, we're back to an overbought condition on the March E-mini futures contract, implying that you're about to have a downside correction. These overbought conditions can last several days or a week, and it did the last time around, but they can be only a one-day affair. Because of the size of this particular swing, which is pretty good, better than I expected originally, I had to think that the downside correction could still get back down to 48.44. Next chart. The spider is also overbought, no surprise. They're the same basic index, but it also has a gap to close, and that would be at 495, give or take a little. So that's my first objective, but there's still the support area, a couple of them. So I would not be surprised to see 43 or a little lower. Next, NASDAQ futures contract March is not quite overbought, but super close. About 74 right this moment on my scale, and at 75 or higher, it gets yellow and is overbought. So we are, again, super close. Therefore, correction time. Next, DIA. Not the same story. Can't seem to clear the previous highs. Fourth day around the same high price level, 387.80-ish. And actually trading at the moment lower on the day. So, if the market starts to flip back down, I think the DIA could lead the way down. It's got the least strength at the moment and failing, so to speak, where everything else is not. And the next chart is a QQQ, also overbought. Barely, but that's it. So I have several reasons or indexes that have gotten overbought today, looking for a downside correction very soon, futures. Here, I'm going to fly through them. S&P March futures contract continuation overbought. Same commentary. NASDAQ, not quite super close. 74 and small change on the scale, and a little bit more of a rally, and it will also be overbought. Next. Bonds look like they're going to test that support area I've been talking about, and maybe they're going to bounce at that point. 10-year notes did test a support area and bounce, but now we see new lows for the move, and the next level down would probably be in the ballpark of 109. Next, crude oil, rocking a hard spot. Maybe we'll get up to the resistance area at 82. I don't see anything much more than that at the moment. Next, natural gas at supports, but oversold yesterday and today. And I know it made a new low for the trend, but it really needs to stay below the old low in order to look a lot better on the downside. Otherwise, this could be a low day, and we're going to pop back up again to 2.025. Next, heating oil, now in a resistance area, overbought conditions 2 days in a row. I expect it to turn right back down again, maybe back to where it was before, approximately 2.6 or maybe a little lower. Gold, sideways, waiting for something to develop, no comment. Silver, pretty much the same, although there's a bit of a bearish tendency here, of course, but still losing downside momentum for the moment. Platinum, new lows for a couple of months, coming into a support area and a little bit lower in price will probably generate an oversold condition at the same time, maybe getting to the support, beginning of it at 842.70. Next, high grade copper, oversold 2 days in a row in a support area, probably going to bounce, but it's between a rock and a hard spot also, and it's at one of them. Next, soybeans. Doji inside day trend is obviously down, not oversold or even quite that close. I think this is going to break out to the downside very soon, and the next step down is probably going to be, well, it's already there, probably down to 1125 next. Bean oil at resistance yesterday and today a little more accurately, and flipping back down momentarily. I think it could make a new low for the trend here very soon. Next, meal made a new low for the trend and is bouncing back very slightly. This is not particularly impressive. I kind of expect more sideways to lower, point blank. The previous lows that are important are 330, 470-ish. I think we're going to reach that pretty easily next week. Next, corn continues to do as I expected. It's a stair-step down bear market on a long-term basis like wheat has been for quite a while. But wheat hasn't made new lows for a couple and a half months now. It's going flat. I do see something bullish potentially, but there's no breakouts. I have nothing to say more than that, but keep your eye on wheat on a long-term basis. Cattle bumped against resistance second day in a row, overbought, trading a little bit lower momentarily. I can't help it. I think it's maybe caught between the rock where it is now and the hard spot down below. So I frankly would look for 181.24 or something. Hogs, rock in a hard spot, support bouncing back and forth in ranges. Neutral. Next, OJ. Yesterday did have unbelievably another major bearish engulfing key reversal. ER sell signal. That's the red bar, yesterday's activity. Now, you know ER1 is short the day of the red or long the day of the green. So we also have picked past tense a huge move back here on November 21 of 23, and also what amounted to the first shoulder. You don't know it at the time. October 31st, 23. Both of those are bearish engulfing my sell signals, ER sell signals, and a great move in both cases. We actually caught the low or extremely close to it with the green bottom here. So track record pretty good lately. This looks great so far. ER1 overnight is still short. We may not be able to rally back up to my little red dots to get short on ER3, but we'll see what happens. Bearish, point blank, probably going to come down to 337, 326, and maybe even break that. This could be a very, very big sell signal because this time up, the market didn't make new highs historically. And that may be the beginning of your lower lows and lower high trending down situation. Next chart, cocoa. Boy, oh boy, blow off top is all I have to say. They can last a little bit of time. This has already been 3, 4, 5 days, something along those lines. I think this is going to top out at any moment, maybe over the weekend, so to speak. Next, coffee. Wow, okay, that's not what I wanted. Remember, I was talking about the possibility of a head and shoulder top, and the last shoulder was a little bit too far to the right for comfort, but the price levels on the rally were also a hair too high. Nevertheless, probably a decent shoulder in many cases, but not anymore. This pattern is now pretty much dead because of this rally today being not what head and shoulder tops tend to do. So what do we got now? We got support area that held, basically killed the shoulder idea. About to make a new high, it looks like. Nowhere near overbought. I think this market could attack the highest high at 204.30. Next, sugar. Resistance still stopping most rallies so far. I still think this is in the process of topping out. Let's see if it can start to make new lows below 23, and that'll probably start to drop it off to test these previous lows in December. Cotton the rag. Blow off top again. Can't help it. Right up against historical highs over here. Wow. Classic spot for it to top out and create a broad double top over multiple months. Very, very overbought on top of that at 92 plus 93 almost. So I can't help it. Expecting a top. We're back to E-mini. You guys have a great weekend. A couple of exciting things coming up next week, it looks like. Thank you.